In India, one name is synonymous with two-wheeler helmets, Studds. But this is not just an Indian company. By volume, Studds is the world's largest helmet manufacturer, and now, it's going public. Today, we are doing a full, deep dive analysis of the Studds Accessories IPO. Established in 1975, Studds is India's largest two-wheeler helmet player by revenue. Its core business is designing, manufacturing, and selling helmets under its mass-market Studds brand and its premium SMK brand. They also sell a range of accessories like luggage, gloves, and jackets. This company is vertically integrated. They have 4 facilities in Faridabad, Haryana, with a massive 9.04 million helmet production capacity. They make their own EPS liners, molds, and even have their own VCA-certified, in-house testing labs. Studds is also a global player, exporting to over 70 countries. They have a new subsidiary in the US and Canada to expand their direct presence. They sell through 363 distributors in India, e-commerce, and are a key supplier to OEMs like Honda, Hero, Suzuki, and Royal Enfield. So, why is this industry so interesting right now? Because the Indian helmet market is consolidating. The strict BIS compliance and the ban on non-ISI helmets are forcing the unorganized sector to shut down. The organized segment's share is set to rise from 70% to over 80%. This growth is also driven by a shift toward premium helmets, like the SMK brand, a boom in high-value leisure riding, and a greater focus on safety regulations globally. Now, let's look at the financials. The growth is strong, but the profit growth is explosive. While revenue grew at a steady 8.5% CAGR, the profit growth is where the real story is. EBITDA grew at 32.1% and profit after tax, or PAT, grew at a massive 43% CAGR between FY23 and FY25. Look at this. In FY23, the company had revenues of 499.2 crore rupees and a profit of 33.2 crores. By FY25, revenue hit 583.8 crores, but net profit more than doubled to 69.6 crores. This is because their margins are expanding sharply, with EBITDA margins jumping from 12% to 18%. This margin improvement is the key. It's happening because of their vertical integration saving costs, massive investments in automation and robotics, and a strategic shift towards selling more high-margin premium helmets. In FY25, the mass-market Studds brand made up 78% of revenue. The premium SMK brand was 12%, or 69.3 crore rupees, and accessories made up the rest. Exports are also a fast-growing segment, at 16.6% of total revenue. What makes Studds different is its funnel efficiency. In FY25, they sold 7.11 million helmets. Their distribution is massive, 363 distributors across India and exports to over 70 countries. They also have significant OEM contracts with all the leading motorcycle brands. So, why is the company raising money? This is a key point. This IPO is a 100% fresh issue. No promoter is selling their stake. All the money raised will go into the company for capex, funding the expansion of their new facility upgrading automation and boosting their premium SMK production. Before the IPO, the promoters, the Khurana family, hold the majority. The anchor allocation, which is the first sale to big institutions, was very strong, with major domestic mutual funds and institutions like HDFC, ICICI, Nippon, and Kedara all taking a position. Now, the most important question, what is the valuation? The FY25 earnings per share is 17.7 rupees. The company set its anchor price at 585 rupees per share. This implies a price to earnings, or P/E ratio, of approximately 33 times. How does this P/E of 33 compare? It's difficult, as Studds has no direct listed competitors in India. However, the indicative P/E for the broader consumer discretionary and lifestyle sector averages between 30 to 40 times. This suggests that the valuation is not cheap, but it is reasonable. The anchor price of 585 rupees sits right in the middle of the fair value range, assuming it performs in line with the rest of the sector. While the story is strong, there are clear risks. The company is vulnerable to raw material price volatility, like ABS and polycarbonate. Its success is heavily dependent on two-wheeler sales, and any macro shock to that industry will hurt. They are also exposed to regulatory changes and new competitive pressure. Let's look at the competitive landscape. Let's summarize with a SWOT analysis. The weaknesses and threats are also clear. The company's governance is strong, with promoters who have over 42 years of experience. The board has deep technical and operational experts, and all facilities are internationally certified. The operational highlights are impressive. The company has a rapid prototype to launch cycle of 9 to 14 months for new designs, and its robotics program is central to its cost-saving strategy. IPO momentum is strong. The anchor book was well distributed, with over 80% going to mutual funds, which is a very positive sign. Retail demand is high, and the gray market premium is positive. So, here is our final investment decision. Studds Accessories is a market-dominant, vertically integrated, and technologically advanced helmet maker. It has strong domestic and export growth, rapidly improving margins, and deep promoter experience. The 100% fresh issue is a big sign of confidence. The valuation at 33 times earnings appears reasonable for a long-term growth investor, especially given its sector-leading profitability and the global tailwinds. The strong anchor enthusiasm confirms this. We recommend applying at or near the anchor price for strategic, long-term growth exposure. Post-listing, investors should monitor raw material costs and the company's export ramp-up.